Today, comparing Canada and Australia. Hello again, it's Martin North from Digital Finance Analytics, Work and Latest Posts covering finance and problem news with a distinctively Australian flavour. And today I'm joined by Daniel from Formafist. Hello, Daniel.
Hello.
Good to
How
see you
are you
again.
doing?
Yeah, I'm
Yeah.
doing well. About a year ago, we had a chat and a few things have changed. And I guess, it's really quite interesting because you're going to be in the middle of winter there, right? I reckon it's pretty cold. Whereas here we've got bushfires, it's 120 Fahrenheit plus, middle of summer, complete drought. So in a way, there's some massive differences between the two economies and two countries. But actually, in other ways, from housing perspective, there are some similarities. So I thought it'd be good to compare those today.
Yeah. I think there's a lot of similarities. Yeah.
Yeah. Okay. So what we did, we sort of cooked up a few questions, and the plan is that we'll have a chat initially about Canada, and then we'll cross to your channel and we'll have a similar conversation about Australia. So there's a little bit of cross propagation between the two.
Sounds good.
Okay, so then let's get started with regard to Canada. So, what's happened to house prices over 2019, and what about sales volumes? Has it gone up, gone down?
So I'm basically going to focus on Vancouver and Toronto. Those are the two big main centers, and everything around them are basically spillover. So whatever happens in Vancouver is going to spill over to the rest of BC, essentially. Same thing, Toronto to Ontario. So Vancouver prices are on a downward trend. Uh, they've kind of slowed down right now. Toronto is trending up. They peaked out. They had a first peak in May of 2017, and now they're back to that peak. So they peaked out, prices fell quite sharply, and then they kind of flattened out, and now they're just back up. So you could say over the last 2 years, it's been essentially flat, but the overall trend is up. Sales volume in Vancouver right now is up. It's trending up, but that's off a weak base. So, I mean, I think you call them spruikers in Australia. I wish we had a word like that. But here, the spruikers are basically saying, yes, everything's on fire, but really it's just normalizing. Toronto is up as well. So the basic story as far as prices and sales volume and that is nothing crazy is happening as far as I'm concerned. The big moves as far as I'm concerned are still to come.
And units or apartments or whatever you call them over there, and houses, are they behaving somewhat similarly?
It really depends on the market. I'll just talk about Vancouver. The detached, specifically the luxury market in Vancouver, has really fallen off. So the high end in Vancouver market has really fallen off. Um, Condos are following; they're starting to follow now, but there's a lot of people that thought it would be basically what people say is a top-down type of move, and top-down from luxury down, detached semi to condo, and then I don't know if many people say this, but I do. It's basically Vancouver is making the moves first, and then it's happening in Toronto. Basically, a year later, if you look at the charts, you might be able to put some of those up, but you can basically see the movement. The upward momentum in Vancouver peaked out, and then it fell, and then it came back up, made a new high, and then it's fallen for the last year. Toronto has done essentially the same thing, but a year later. So that's kind of what I'm seeing.
Interesting. And the big question, of course, is foreign buyers. What's happened to them?
Well, the foreign buyers are a funny thing. There's a lot. happening with the foreign buyers. Um, so the foreign buyers are pretty well gone, and it's a lot to get into. But the most recent one was the Hong Kong buyers. So there again, the spruikers, they were saying that the Hong Kong people are gonna come and they're gonna be the next foreign buyers. Um, but uh, that's making a lot of assumptions. So that's making so supposedly there's 300,000 Canadian passports in Hong Kong. I forget what the actual number is, but there's a lot of people that could just move back to Canada. But it's making a lot of assumptions. It's making the assumption that they're all wealthy enough to come and buy in Canada. So that's, you'd have to cut that number down to whatever it is. They'd also have to be able to get their assets out of Hong Kong. Hong Kong real estate isn't so hot right now. If they've got their investments in Hong Kong, they'd have to sell them and then move them. I don't know that there's as much as people think there is actually moving. The other and the biggest assumption with all of that is that they're going to come back to Canada, because if they're in Hong Kong, they're there for a reason. They could just as easily be in Canada. So why are they in Hong Kong? Well, maybe it's because of Hong Kong as a city, the lifestyle in Hong Kong. I know they call Vancouver Hongcouver, but it's not really comparable. So I think it's a huge assumption that they're going to come back. The other thing is, a lot of them are there because the business opportunities are there. They're like they're in between China and everyone else. There's monies that move through Hong Kong. So there's a lot of people that will be moving to Singapore instead because it's a better place for their business. So as far as that goes, I thought I'd just address it because that's the latest. I'm sure we'll get into it when I start asking you about it, but that's the latest thing. As far as the foreign buyers, the mainland buyers, which was the big story over the last few years, we'll get into that and kind of get into the policy changes that have been happening. So with the foreign buyers from mainland China, there was, and you can't really point to it because the policing around it wasn't very good. So what's happening now is there is public inquiries going on. They're investigating, but everybody on the ground in especially Vancouver would say that there was a lot of money laundering, a lot of money laundering through gambling and through real estate. So if we go through some of the things, and when it comes to foreign buying, Vancouver's been the most active in following up on it. So as far as gambling, there were stories I talked about in our last one. Vancouver's famous for bringing hockey bags full of cash into casinos and washing it through them. And it was on the ground. If you were going to these casinos, everybody knew about it. So this is why the public in Vancouver and BC, Canada as a whole, are so upset, because everybody on the ground knew about it. It was common knowledge. But anyways, so there's been billions of dollars laundered through casinos. Investigations are underway. The proof that it's working, the investigations are working, is that the casinos are now reporting significant profit declines. So you can see where they started getting interested in looking into gambling, and now the profits are down. So much so that one of the biggest casinos in Vancouver Park was actually sold at the beginning of, I think, February of this year. So I think it was a Las Vegas owner. They basically said, well, this is no longer a license to print money. We're going to rid ourselves of it. So things like that, you can actually see that it's actually working. These investigations and inquiries are working, or even the fear of what's going to happen, the results. The foreign buyer tax in BC is being increased. So there's all sorts of taxes in BC specifically. There's empty home taxes, there's foreign buyer taxes, there's empty home taxes, parts of which apply just to foreign buyers. So as far as foreign buyers, the tax now is going from 0.5% to 2%. So that's a significant increase to foreign owners and, importantly, satellite families. So most of your viewers will know what satellite families are. The money's coming from China, the breadwinners in China. The satellite family is here. And one that I like is the vacant land exemption for foreign buyers is gone. So that there was an exemption, but that is ending as of December, I believe. Another one, as far as foreign buyers go, not all of this is just about foreign buyers. So the Landowner Transparency Act, effective May 1st, 2020, so next year. So what buyers were able to do is hide behind corporations, trusts, and partnerships. So now in BC, they have to disclose who the actual beneficial owner is. So that is massive. That's huge, and it's retroactive. It'll show everything years and years previous. So that's another big one. There's a public inquiry into money laundering. So the money laundering system was actually coined by an Australian. So another reason for Canadians to be pissed off is that it took somebody halfway around the world to point out that the Vancouver model of money laundering, it's called the Vancouver model because it originated, it was so prevalent in Vancouver. So there's going to be a public inquiry into money laundering. So this is going to get really dirty because it's going to get into the drugs, the money laundering, the casinos, which, you know, are tied in with the province. So this is government, this is policing, this is international, China to Vancouver. It's going to get really messy, and chances are I would suspect that it's going to spread way beyond Vancouver. It's going to get in, this type of thing has happened all across Canada. So just because it's a British Columbia public inquiry, I think it's gonna turn over a lot of rocks all over the country. The other one, it's an old story, but it's still relevant, is the Chinese capital controls. So I think we probably talked, it's been happening for quite a while, but there's just been so much capital leaving China, and they said, no, that's enough. So they are clamping down. People will argue that there are ways around it, but if I'm betting on people taking money out of China and the Chinese government, yeah, I'm going to bet on the Chinese government. I think they will be able to clamp down on that. So basically, foreign buyers, it's becoming a hostile environment increasingly. Like almost month by month, it's becoming increasingly hostile. You buy property here, you're going to get taxed. You own it, you're going to be taxed. You know, it's just becoming a really hard place for a foreign buyer to buy into. And that's why people on the ground are saying they're pretty much gone. Um, I'll throw in, I'm going to get into this a bit later, but if you follow the Twitter handle Mortimer_1, you can throw that in there. You'll be able to see the high end, the luxury market in Vancouver. These are people and businesses taking $100,000 to $1 million losses on properties. So you have to wonder why would anybody take $1 million loss on a property? And what Mortimer does, he shows the losses, the last sold and the current sold, and I'll also show the people or businesses that do it. So, I mean, I have to be careful here, but a lot of them have Chinese last names. It doesn't necessarily mean they're foreign buyers, but a lot of times it does. And a lot of these luxury properties are corporations or trusts or whatever. So again, doesn't necessarily mean they're foreign buyers, but a lot of them are. So that's kind of, it's a lot that's happening with foreign buyers.
Very interesting. So the environment really has got very sour for them, and we'll see that there's some similar parallels in Australia when we talk about Australia in the next part of the show. One of the other issues that we've got in Australia is the very poor quality of construction, and we've got lots of buildings now that have been built quite recently with cracks, and people effectively are being forced out of their homes because of very poor quality. Anything like that happening over there?
No, no.
Okay.
We've had experience with that. Like I've been following what's happened in Australia, and it's scary. I mean, there's no other way to put it. Like there's people living in these buildings and they're crumbling. We've had things like the leaky condo syndrome in Canada, where there was a time span where they were putting up stucco that was. But anecdotally, my friend has worked in the trades in Australia and here, and he basically said in the nicest way possible, we're a bit better here. The follow up and the watchful eye is a bit more on point here. But there's nothing near what we're talking about as far as what's happening in Australia. But as my friend says, it's pretty good here. I mean, I think the one thing I think he mentioned was because of the boom, the kind of compromise that you make is that when everybody's employed in construction, they're desperate for workers, so you don't get the pick of the litter when you're building out your crew. So, you know, it remains to be seen. I mean, 5 years ago, would the average person, if you ask them in Australia, if you ask them, do you think there's going to be a problem with these? They probably would have said no, no, right? I mean, so who knows? There's massive building in both Vancouver and Toronto, so these things sometimes take years and years to play out. So we don't know yet.
Okay. One to watch, perhaps. And what about the broader economy then? What's happened to interest rates over the last year?
So interest rates. This will be a quick one. Uh, nothing. Nothing really interesting as far as interest rates. It feels like, as far as North America, Canada, and the U.S., we're kind of in a holding pattern. Uh, as far as the economy goes, so I thought I'd go through some headlines here, and you can throw these up. I'm just going to read off some headlines, and on the surface, it seems like everything seems okay. On the surface, everything seems okay, but there are cracks showing. So I'll read off some of the most recent headlines. So in Alberta, which is basically oil and gas, unemployment rate among young men in Alberta nears 20%, a level not seen since the early 1980s. So I know that maybe 7 years ago, everyone from my town, my age, was going over to Alberta. They could get a job, no problem. They'd come back in the summer with a brand new $60,000 truck. That's obviously not happening anymore. Uh, the Canadian regulators are asking banks to set aside a little extra cash That's how they're putting it for a rainy day. So that's the Office of Superintendent of Financial Institutions, OSFI. So that's, I think, your loan loss provision. So yeah, that's pretty telling when those institutions are saying, are telling the banks, maybe you should put a little aside for a rainy day. I think that's very telling. Uh, Canadian unemployment levels rise everywhere but the Maritimes. So how would I put this? So the Maritimes to Canada is maybe what Perth is to you guys. I've talked to my Australian friends, and it's basically another country. So there's like 6 people who live on the Maritimes, so I wouldn't put too much into that. But the rest of us, unemployment is rising. Greater Vancouver households are going broke mega fast. Insolvencies are up 17% over the past year. So Vancouver insolvencies up. Toronto household debt problems surface. Insolvencies rise over 26%. So those are your two major hubs, Vancouver and Toronto. What does Canada produce? More than half of Canada's GDP gain was from real estate transactions. So that's pretty amazing. More than half of Canada's GDP gain was from real estate transactions. One of the biggest criticisms of Canada is, you ask, what does Canada produce? We produce real estate, and it's not an overly productive thing to have half of your GDP gain. So, Canadian economy posts biggest monthly job loss since the financial crisis. You're starting to hear that phrase, since the financial crisis, a lot more, because that's where you go back to where things were this bad. The economy lost 71,000 jobs. Now, that jobs number is cooked in the first place, seasonally adjusted, whatever you want to call it. But if that becomes a trend, it's something. Right now, it's a $71,000 job loss. It sounds like a lot, but as far as I'm concerned, we're just watching to see if that turns into a trend. So as far as Canada goes, it feels like Canada is a pot on the oven and the Canadians are the frogs. And, they don't seem to care. So that's what it feels like right now. The heat's been turned up, but no one seems to really care.
Oh, it sounds horribly like Australia. We'll see later. And what was the biggest surprise of this year then, relating to property and finance? What's the one
So
thing that you?
yeah, so that was an interesting question. I don't want to sound arrogant, but not much surprised me.
Oh well, good.
Nothing shocking. I could say that one of the most surprising things to probably everybody else was the fact that in Vancouver, the luxury market, homes are taking $100,000 and $1 million plus losses. So these are properties that were bought maybe in 2015, 16, 17, and they're selling them for $1 million loss. That should be very telling. Why in the world would all these people? It's a ton. Again, if you go to that Mortimer one, you can see them all. Why are all these people deciding, hey, I'm just going to take $1 million hit on this property and jump out? That should be very, very telling. But as far as me being surprised, I honestly, I figured within a range, everything's going to fall within a range, and nothing's stuck out like a sore thumb. Nothing outrageous has happened as far as I'm concerned.
So very interesting. So we've got a bit of a sort of a feeling of what's happened. So now let's look ahead a little bit and think about 2020. Do you think home prices will go up and volumes go up and down, or is it going to be more of the same, or is you going to see something a bit different, do you think?
My personal view is that Vancouver will continue its trend down. It's often said that nothing moves up in a straight line and nothing moves down in a straight line. So I think we're in a bit of a pause in Vancouver, it seems, a holding pattern, but I don't think that holding pattern is going to last very long. I think my thought was that my best guess was that Toronto would roll over this fall. Now, it doesn't look like it's going to at this point, but if it doesn't this fall, I think it's right around the corner. I mean, I call these things to the quarter for fun. I don't know too many people in their right mind that are going to call the housing market to a quarter, but I do for fun. But I think my best guess is that it's going to turn over, and the reason is as a nation, the upward momentum is broken, and that upward momentum carries a lot with it. You've got all the speculation and the froth, and that has momentum. So once that momentum is broken, and if you look nationally at house prices, they've kind of plateaued. Well, for a lot of people, plateauing is essentially falling. They've bought in. Their financial decision to buy in was basically predicated on house prices keeping going up for another, 10 years, because that's a common thing that's thrown around is real estate values double every 10 years. So the very fact that prices are plateauing means that, and I've made videos about this before, that plateau historically has been a year or 2 years. Basically, you can pay your mortgage for a certain period of time, even if you're one of those people that the financial decision needed prices to keep going up. You can hold out for a certain amount. But from what I've seen is that it only lasts for maybe a year or two. So it's kind of what I say is that basically flat is down. People just don't know it. So I think the long-term trend is still down. I think one of the I'll send these over, but Canada's household debt burden is a good slide to show, and the Canadian household interest paid. So you'd think interest rates are very, very low, but if you look at the chart of interest paid, it's going up, and it's got to be just because of the sheer volume of loans. So all of that is unsustainable in my eyes. I think the things that would break the market, if you want to call it that, are the economy, people losing jobs, or the one that's harder to nail down and not covered as much is basically debt saturation. It's the sheer volume of debt becoming overwhelming. So I think those two are the big ones. The third one maybe is death from 1,000 cuts. There have been, like you saw, there's just been so much policy changes, and I didn't really even get into the stuff that's happening in Toronto. They're wanting, the city is wanting rent control, that kind of thing. So there's just the death from 1,000 cuts. So the question is, what are the fundamentals? I'm sure it's the same in Australia, maybe not so bad, but the fundamentals are like what your wages are, right? So the gap between house prices and wages is just gone crazy. So for things to come back, you need the froth out of the market, which I think the froth is kind of out. It's hard to say. In Toronto, the musician Pharrell Williams is designing condos now, so maybe the froth is still there in Toronto, but in Vancouver it's off. The fear of missing out is actually surprisingly, and this is shocking to me, but in a place like Vancouver where prices are down 10+%, the FOMO is still there, because I don't want to sound too biased, but the real estate industry is really good at pushing their agenda, pushing this idea that prices will turn. The headlines that they would have put in this chat to you would have been, there have been numerous Remax and all these spruikers saying that things are going to turn around in 2020, and the average person that doesn't follow this too closely is inclined to probably believe that. They'll just read that headline and that'll be it. So in my opinion, long story short, I think the trend is still down.
Mm-hmm. And it's interesting because we have the same hero, and people don't go into the detail; they just grab that headline, and it's psychological as well. They want it to be true, right? So they prefer to grab
Absolutely.
that information that everything's going to be fine and the value of property is going to go up because ideally that's their idealistic outcome, so they tend to grab it. And I think that psychological aspect is actually quite important to understand. You can't just look at this market rationally. You've actually got to understand the psychology and all the moving parts and all the spruikers, because it's such a big part of it.
And that is such an important point to bring up. I think that is so important because I was talking to somebody about that recently. People want to believe. They want to believe that real estate, you know what? People would never believe it, but I want to believe. The reason I created this channel is because I want somebody to convince me that real estate's going to go up. Then I can just buy and it'll be over with this. You're a nice guy, but I wouldn't have to talk to you anymore. I wouldn't have to make videos. I would just go buy. But the fact is, when I do the research and I really look into this, I read past the headlines, no, it doesn't make sense that prices will continue to go up. But I'm with everybody. I get that. I want to believe that prices will go up. I just don't.
Yeah, and so with that backcloth, presumably the central banks probably won't be doing much anytime soon.
Yeah, well, that's the really tough one. I had a conversation, and when you get into interest rates and what happens with that, it's so difficult to say. It's so difficult. Okay, so this is a quick summary of what I think is going to happen. I can send you this chart. If you looked at this, the graph of bond yields in the United States over a long time, you go to some of these sites and they'll show interest rates, but they'll show since like the 80s, right? So you see this, right? If you go back 100 years, you see this. As with pretty much everything else, you start to see the cycles. The interest rate, the overarching cycle, the big cycle, is too big to just look over like 3, 4 decades. You have to look way back. So if you look at that, you will see that interest rates, and I just did a talk with somebody about this. If I handed that chart to a 7-year-old and they saw the interest rates going like this, and now they're here, and I asked, where do you think they're going to go? Well, they're going to go up. It's happened over and over and over again. So I think interest rates will go up, and that's not going to be in the central bank's hands. That's going to be the markets dictating that. That's way over my head, but obviously I'm a simple guy. That's what I understand. If I look at history, I can see the chart. And the other one we talked about in the chart is the reserve currency. This is kind of a non sequitur, but the reserve currency changes throughout history. It went from most recently went from Spain. It was once Portuguese. It was British, and then the United States. And the period that they have the reserve currency is it maxes out at 110 years. So there's huge business cycles, there's interest rate cycles, there's a reserve currency, so many things happening. I think the easiest way to look at it, or the one of the safest things to understand, is nothing stays the same forever. Everything, change is the only constant.
Well, it's interesting because Mark Carney, who's the guy in charge of the Bank of England, made a speech at Jackson Hole when they had all the central bankers there, and he was basically arguing that the reserve currency has been the US dollar for some time, but that may not actually go on forever. And then the question is, well, what will the next one be? Will it be the yuan? Will it be some sort of digital currency? And he was actually advocating for a central bank-based digital currency, a bit like Libra, to be able to actually be the next cycle. I mean, you're dead right, though. If you look at history, it does change. And of course, those critical changing points have significant impacts on the economies around the world. So it'll be interesting to see how that plays out.
Yeah, for sure, for sure.
Then I guess what we, I think, sort of coming to as we come to the end of this is that it's been a reasonably good year for property over there in Canada, although there are some signs of some cracks. Forward looks as though it's going to be somewhat similar, with a little bit more of a down cycle than an up cycle. But underneath the surface, lots of issues around household finances. The debt ratios are very high, and therefore the risks in the economy are building. Is that a fair summary?
Yeah, I think that pretty much sums it up. I think I do feel like the fireworks are coming. I don't. I thoroughly disagree with. I mean, surprise, surprise. I thoroughly disagree with like Royal LePage and Remax and all their real estate brokers, their press releases. Surprise, surprise. I kind of disagree with them. But yes, your summary that would be on point.
Well, Daniel, I really appreciate your time today, and really interesting to hear about the Canadian market. There are so many echoes to Australia. So what we should do now is to flick across and go to your channel, and then we can talk about Australia and see about some of the things that are going on there.
Sounds good.
Great. Good to talk to you.